Good morning. It's Monday, July 1st. I'm actually recording this video on Sunday, the 30th of June for posting tomorrow morning, so that's why it looks pretty bright out here. I'm actually in my backyard here in Newport Beach, California. Beautiful day here. Following a very difficult week in terms of rates on Friday afternoon. Posted here in this post is our weekly newsletter. Again, there's always a link both to the newsletter as well as if you'd like to subscribe to the newsletter, you can do that as well. If you subscribe, you get the newsletter every Friday ahead of the weekend so that you're well prepared to discuss what's happening in the market with your clients and customers. This week's newsletter has a headline, "Slow start for rates gives way to volatility with more to come next week." So you saw most of the data that was released last week was very favorable for inflation, ergo should be favorable for interest rates. Particularly PCE, the Fed's favorite inflation gauge, came out on Friday, and again, it was reasonably favorable to inflation, both the month and the monthly core and the year-over-year and the year-over-year core, which excludes food and energy, which are very volatile in the calculation. The Fed has declared that there's not going to be any interest rate cuts until we get close to the 2% PCE number, and we've trended down to 2.58 on the year-over-year core, which is still trending in the correct direction. But on Friday afternoon, we saw a material sell-off in the market, and rates got worse. In some cases, I would say materially worse. Much of it having to do with simply the end of the quarter trading. This is a kind of a technical happenstance that happens at the end of each quarter where large bond investors are trading out their positions. And so there was very little correlation between the data we saw on Friday or even last week to what happened in the market. This week, I would expect that we're going to trend reasonably sideways, maybe up and down a little bit. We'll see a little bit of volatility. Obviously on Thursday, we have the July 4th holiday, so the markets will be closed. But followed immediately Friday morning, we're going to get June's unemployment and jobs creation data. And obviously that has been a huge mover in the market. We're going to see a number. The current forecast for that number, for the jobs number on Friday is 180,000 as compared to 272,000 in the previous period. In addition to that, we have a forecast of 4% for the unemployment rate on Friday against 4% last period as well. There's three other kind of events this coming week that we should pay attention to. On Monday, we're going to see the ISM manufacturing PMI, the Purchasing Manager Index, which is forecasted at 49 versus a prior of 48.7, so slightly higher. We're going to see the JOLTS report, and on Tuesday, we're going to see the JOLTS report, the job openings report, and Chairman Powell is going to make a speech in Europe, which always moves the market. In addition to that, on Wednesday, we're going to get the ADP private jobs report and the ISM non-manufacturing PMI, the services PMI number, Purchasing Manager Index number, which is forecasted to come in at 52.5 versus 53.8 in the last period. But the big kahuna, I suspect, will be Friday on the employment and unemployment number. Again, 180,000 forecasted. Anything that comes in at or below that number should be positive for rates, and we'll move beyond the technical trading that we saw on Friday afternoon. So again, the link to the newsletter is above or in this post, as well as the link to subscribe. Subscriptions still remain strong, so we encourage you to do that. It's free, can't beat the price. Secondly, you'll see a link to the weekly roadmap. We just completed our second weekly roadmap. I encourage you to go to the link above and see what's going on in the weekly roadmap. You'll be able to go up and see a video of last week's call. It's an hour-long call. Last week we had Jeff Walton from Ingenious on as a guest. We reviewed the market data live. We take live Q&A. It's for any sales or sales manager in the industry that either isn't getting that kind of information on a consistent basis from their boss or their company. And even if you are, it gives you a little additional context to what's going on and additional information. Beyond that, we've created a community site that you can subscribe, and we're making this free to the market and to the industry through the 1st of August. So if you want to come on and test drive it, we're going to line up some excellent speakers that will be announced this week throughout the month of July. And we'd encourage you to come on and test drive this call, the weekly roadmap. The link to it is up above or in this post, in this social media post. I encourage you to link to it and see what's going on. Beyond that, I wish everybody a great week and look forward to talking to you again soon.